Welcome to TradeTheMBI.com. This is John. This report is for January the 9th. My gosh, I think I have a hoarse voice, but that happens. Needless to say, we're getting exactly what we expected from the market. We weren't getting any readings that suggested we were going to just, fall apart and collapse. But we knew we had the positive extreme on the INX. We knew that we also weren't getting a matching or corresponding readings from our futures. And this disconnect started right at the end of the year with the fiscal cliff setup, where we started getting all these buy signals from the overall INX cash index, as well as the futures, and then they did the little liquidity dump on the futures when there was no one trading it. It kind of threw things off a little bit. Not a real tragic issue or anything like that. But we had the red dot short. Still have that downside target of 37. That's still 20 points away. Just taking a fraction off of it. And that's normal because when you flip to red trend, going back to green, it's like I talked about. Usually it's the first one after that initial trend change that you get your retrace to first. And so we've done that. So now you get this big range right here and a mid-sized point for our overall target, and with the ultimate target being obviously a retrace of this. But it doesn't have to be the case because we did have our wonderful trend change from red to green. So that being said, numbers aren't really that ugly. I mean, for instance, our shakeout plus 12 dipped a little bit today on this move. Not horrible. You now have the orange above the yellow. That's going to be positive. Whereas we were looking for a negative resolution back here when the yellow was below. And so you then look for your power momentum to see if the yellow can get a bit above. And that actually happened on the close today. You can see that we actually switched the ratio because we had this nice rise, and I get the first indication that maybe shorts have a little bit more in it. And so we're going to have to take a look at our up-down power and see if there's something special going on. Support resistance wise, it's massive up move and just a tiny little retrace in there, and everyone still kind of holding on to a bullish precept, I think, overall with it. So I hadn't even run this number, so let's go ahead and do it together. 121 divided by 250 doesn't look bad. 48%. Okay, so that's like really low as far as shorts. So it looks to me like they've been covering pretty substantially. However, you notice you have fewer and fewer buyers, and this is what I was talking about. As we got past the 5th of the month there, you've sort of spent the wad of your mutual fund guys as they were applying into it. And we did have some decent short setups. So, is there going to be new money to really lift things, or are people just not going to sell, which would help lift price? We're not going to just assume and jump into the setup. I want to see that, a little bit more of that retrace to get us there. Now, what I found interesting is we end up with an MSI, and you might be saying to yourself, MSI, what the heck is that? All right, well, that's, gosh, it was a precursor to your red dots and some of the more intricate bifractals, but it usually represented a point like a GAM where you expected a little bit more volatility. So that's an interesting thing after having these first couple of days that I was expecting a little downside pressure, but now all of a sudden we're getting an indication that we should expect volatility to start increasing. So now we might have to go take a look at the VIX in a little bit, and the fact that it's coming after we peaked out here on our price oscillator, I'm not going to be hyper to jump on that setup. Not horrible, but again, like I used to tell people, with the MSI, you want to trade long above it and short below it, and just that simple. Now, we went ahead and took advantage of the setup and said, okay, fine, we're expecting a little weakness this week, so we wanted to sell calls. And so this is what we did for our ESF food block. Right here, we'll take a look. We wanted to sell 63s, and it was, I thought, fairly decent premium. I mean, at least 10 plus points of premium built into that. And so we didn't have really anything to lose after having been in the setup overall and not expecting a collapse of any kind. So we're right on target with that so far for the week. Nothing objectionable. If you didn't do it, you wanted to definitely be out around that 62.75. And it came right back down to that area. No real shock with that. It's interesting though, you're still getting buy setups within the decline, so that's still not bearish. This halibut doesn't have an upside target, but it's not hard to calculate. Doesn't really take much. If we go on here, I can just look to see if I have I don't see an average true range on that setup. Maybe I have it in my full setup. Yeah, go figure. Wouldn't you know? And I don't happen to have an average true range on this setup. Oh, anyway, if we had an average true range, we would just multiply it 1.236 times that average true range plus the close, and we would get ourselves an upside target. I mean, that's simple. Uh, I'm not sure why. I must have deleted it accidentally. It doesn't take much to put it in. In fact, it's always good to show that. We can insert an analysis technique, go to an indicator, and we just have to get past my specialized ones, and we would look for average true range, say OK. For our scaling, we're just going to say no axis, and we're going to put it into price. And there is our average true range. So 0.2, so 20 cents is the average true range. You multiply that by your 1.2. So you're looking, well, gosh, we're pretty close to what we already got there. Was it 62.69? So just under 63, right about where it's at. No shock there. But it was worth doing it because it's always good to see the practical aspects of applying some of these things. Speaking of applying things, I mean, look at this from our ABM, which is this trend-following setup designed to help you stay with the trade that's moving in the right direction. And in this case, with USO, we came down. It would have stopped you out right at about this point. At the same time, gives you a buy signal with the halibut. And so that's where the symmetry between them comes into play. And you can see how it's just mimicked price and followed it all the way up, slow and steady. Nothing to do there. You just a little bit of time. It's getting pretty frothy though on USO. Doesn't mean it has to return, but here was one that we talked about, and what a nice opportunity for everyone. I showed you beautiful halibut coming into that setup. Just gap it right up. It's ideal. Now it's interesting because we have this very same halibut signal in this exact same kind of configuration on Apple. Just throwing that out there. Not to mention, well, we can go ahead and look at Apple a little bit. But then you get another bifractal, the orange dot. So combination, you're not overbought. Now almost inside your 12 for beautiful, but this was already good because you're just looking for your first increase in the shakeout there, much higher level. So even though you're at the same low, it was not the same picture. This clearly is not the same setup. This setup is a setup to get people out of the overall position, lose your potential for a pretty significant move overall. Speaking of nice ones, CLF. Do we have CLF down here? No, I don't. Well, not hard enough. We can look because we got out of our CLF. So nothing special there. We had closed it out way back from the call setup. But is it looking attractive to begin to think about selling a put on it? Yeah, with this overall configuration right here, if we get a little bit more market retrace, definitely I'll have us selling puts for next week on CLF. So be thinking about that. Have it in the back of your mind. Even when we look at the 78-minute chart, some interesting bifractal setups. So it's already calling for a move up to 38.83. So that's almost $1 from where it is right now. Not bad. And well, shoot, if it was going to connect, it would go all the way up to that 39 range. So always good to point these things out. X was another one. We just wanted to sell our call, look for some premium. That's all we were doing, selling the 26, looking for about 38 cents. We didn't really care if we ended up being exact. It's already down to 25, so we've already got a dollar range built into it. But this looks positive with moving into a ratio side, but with the orange above. So we may be looking to sell puts on X as well. So starting to catch a little theme here where we're going to be looking to move long with some of these setups if we get a little bit more interaction the way we want it to be. WLT, we turned around and sold 37.50 weekly calls for the remaining setup that we had, and we got over $1 plus for them. So we're right about there. If we get a retrace back a little bit more, we'd be right in line with our expectation on it. It's very positive with the orange, well above. So again, all these are looking good, but they're all getting pretty darn extreme in the shakeout indicator. So we're going to have to keep an eye on that. Nothing wrong with that. It is what it is. We got Wynn sitting up here. This is an interesting one because this goes to an ongoing discussion that I have with a lot of people that have a hard time with the concept. Something gets into an overbought category like this, and we pop to positive extreme. And I know I've been going around with it on MasterCard and some of these others where, fine, you get to a situation where it's like, okay, yeah, I'm starting to expect that we might have a retrace. This one in this case had a buy fractal and was looking for 121. And I was mentioning, well, when it starts to retrace and when it's ready for a retrace, the low right here at 115.88 is going to be what you would expect to start looking for the targets. But each positive extreme, you look for a low retest as well. And so, someone was saying, oh, well, I'm waiting for that. Why hasn't it hit, the retrace? Okay, well, you're right in the middle of this move from red trend to green trend. At least takes 5 bars before that exuberance wears off. We don't have a sell signal from our power momentum. We hadn't seen even lower shakeout readings. In fact, it's been moving higher. And it started to ease a little bit of that overbought. So it could still be a little bit more time before that happens. So, particularly when it comes to shorting, you can't get ahead of yourself. You got to wait for it to actually develop. So, speaking of developing, look at this. Okay, so Apple had been ugly for just forever and a day. And we got this bifractal. It came up here. We got overbought. Nothing you can do about that. But they've retested pretty close to the darn lows. Kept it kind of ugly overall. But look at how much higher that shakeout reading is in relation. Look at how much higher that extreme histogram, and I talked about it, getting to this midpoint would be very attractive at that particular spot. They gapped it up nicely, faded it off pretty well just to scare some people out. But even though the power mo still has the yellow above, the ratio, the relationship between the two lines has narrowed. Now it hasn't flipped, but with this signal, I'm looking for that to take place in the next day, if not by Thursday. For a positive move there, unless I get a move lower on my extreme. The expectation with this pivot is that it should continue and you should get a nice pop from it. Now that halibut is showing the dot, and I was looking at my code trying to find out why this halibut doesn't have one and the other does. And there's more than one configuration that can create a halibut signal, and I just have to go through and verify why it was deleting my upside target and making sure that I had both of them on there. I just have to double check that. The 540.68, and I think that I have, yes, I do have average true range. So we could look at that real quick and say it was 10.5 average true range, and the close there, 520, so that was looking for 530 something at that point, even when that one came in. If we wanted to do it exactly, I can whip out my calculator real fast while we're here. I'll just hold it over. 10.56 times 1.236 is actually 13. So 13 added to that close. We've been 31.80, somewhere in there. Okay, more than reached it. So it wasn't an issue, but it was just interesting because it was above this gap. So you was still been waiting for it even at this point, and then the gap up just really satisfied both the extreme fractal that was right here, and that's where it says extreme. So just like to point these things out. It's good to ask questions about the setups because you begin to learn more about the various things. Not great that we have the yellow above at this particular point, but it's possible that we get a dip below the negative 13, and if the orange would be below, we would be expecting a positive result from it. So we got that. If we take a look at futures, I've been kind of wanting a little bit of a retrace. It's interesting that we're starting to see a red trend setup develop. I would just love to see a little bit more of a retrace, and this kind of setup. If we got a setup like that where we had like almost no cyan and a huge yellow, yeah, I would definitely having us move into our ES to start off and get things rolling. So stay with it. Don't get discouraged. We just have to keep waiting for the right setup, and we're doing the right things as far as stocks. Even if those got called away and things, we're still making the right kind of premium. So no objections to our first week into the new year. As always, though, continue to look for me on StockTwits, Twitter. Trade well.